Welcome to Next in Tech, an S&P Global Market Intelligence podcast where the world of emerging tech lives. I'm your host, Eric Hanselman, Chief Analyst for Research at S&P Global Market Intelligence. And today, we're going to be talking about the latest edition of the Tech Demand Indicator, something we've covered in a previous episode, but there's a new edition of it out. And there are a whole set of insights that are associated with it. To discuss those and dig into what the TDI is all about, our returning guests, Sheryl Kingstone and Liam Eagle. Welcome back to the podcast to you both.
Thank you. Welcome back to discuss one of our favorite new topics.
Yeah, thanks very much for having us. I'm happy to be here.
No, you're picking favorites in research? I don't know. I think that's maybe like picking your favorite children, but...
Also easy.
It is one of my favorites. And, I know it's hard to pick one of your children, but, when it really comes to bringing everything together with 451 research and what S&P is really good at, that's why I'm calling it one of my favorites.
Well, talking about bringing this fusion together, why don't we actually start off with a little bit of background on what the Tech Demand Indicator is for those of our listeners who aren't familiar with it, give them a little insight into what it's all about.
Sure, absolutely. So Tech Demand Indicator, it really is a set of signals that create this top line composite index per se, right? It's about spending intent. And it came together primarily because we have a lot of what we would call, and Liam knows this also, vote data, voice of the enterprise data. We also have a lot of consumer data. We have macroeconomic data. We had all this disparate data in surveys. And now we also have the expertise of S&P Global as it relates to creating composite index. And so the teams came together to figure out a way to use all the assets and expertise that we have to create this new product that's called the Tech Demand Indicator. And so what it does is it targets different measurements of intent by technology, right? So really think spending intent and what those influencing factors are, right? So we're taking a look at different comparable measures of different technologies and business performance on a quarterly basis so that we can create this interactive dashboard, which is fabulous too, because it's not just this static survey data, to bring it all together to give you this full picture today of US technology spending. But we also allow a lot of the users to customize their different views to different interests and requirements. And that's why we call it a Tech Demand Indicator.
Well, and I'll point out for those you mentioned also the voice of the enterprise data, which is a lot of our core IT decision maker study data. This is using that same panel, the group that we love to call the 451 Alliance, that is a curated panel. So we've also got some useful advantages there in terms of longitudinal consistency, a whole bunch of good things that come to the table. But the TDI is the distillation of all of this.
Absolutely. And what's really interesting is to see how that data also correlates to a lot of the other data that may or may not be driving the TDI, but then gives it a little bit more insight. And we'll go into that a little bit later.
All right. So what is the TDI showing us in this iteration?
Liam?
Yeah. So one maybe additional point on the presentation of the data is, so we gather all these signals from surveys. We kind of weight them according to their estimated contributions to overall technology spending. And we plot the results on a 100-point scale. So numbers higher than 50 represent positive attitudes towards spending, and numbers lower than 50 are considered negative.
Good point.
So what we presented in our most recently released results, which would have been released just over a week ago, is that U.S. businesses and consumers showed this overall positive intention towards spending on technology in the results that we gathered during Q3 of this year, and those results speak to their current intention and their intention in the coming quarter. This was the fourth consecutive quarter of positive intent score, and it was a slight increase over the previous quarter. So the score for Q3, or what we refer to as the Q3 results because they were gathered during Q3, was 51.99, which is a slightly positive intent to spend. And it continues this period of positive intent that dates back to Q4 of 2023 when it was 51.42. And so the scores in Q1 and Q2 are both in the positive range. And so what we've seen in 2024 thus far was sort of, you could call it a more or less flat trajectory, but a result that has remained in the positive range. And the current score that we're seeing is slightly above the average for the full year. In terms of what that means in real world impact, this is a positive influence on results for technology companies. So the example that we use here is that first half aggregate revenue for the IT segment of the S&P 500 index was up 10% year over year. And we expect, it's very likely we'll see double-digit year-over-year growth rate for Q3 quarterly results when those earnings have been released. Technology spending, being the sort of real-world representation of technology spending intent, or the sort of trailing indicator, technology spending tends to go up consistently over time. And so, a negative or positive intent isn't necessarily a one-to-one match for negative and positive growth. Generally speaking, it is a push or pull on growth that we would expect to be positive in general.
So in looking backwards and I guess anticipating where this goes forward, I'm curious about your thoughts on what that trend looks like. It sounds like they're staying nominally high. What's the value in being able to shift back and forth perspectives on this?
Yeah, I think the signal of intent being a sort of point in time is somewhat limited, right? As we said, it's got a demonstrated relevance to actual real world technology spending, but it's also a fairly short-term signal. It is a single point in time. And what being able to look forward and backward allows us to do is to kind of turn that into trends and kind of view it in terms of trends. And the numbers that we gather during the periods in which we're gathering them allow us to also look ahead and make projections for the coming quarter. So based on the sort of early signals of intent that we gathered during the third quarter, our projection is that the fourth quarter is likely to see the most positive results that we're going to capture this year. So the projected range for that falls between 51.07 and 55.70, and that's entirely in the positive range. We have a broader range projection that would capture more extreme fluctuations, and that does dip slightly into the negative range, but that would be sort of the edge case. So what that means for actual spending, again, the sort of trend for technology spending is that outside of those exceptional circumstances, it's always growing over time. So if the projections play out and the Q4 results from the tech demand indicator are more positive, it's likely we'll see rate of growth in reported revenue from tech companies grow from Q3 to Q4. Making a more historical comparison, if we look back to 2023, the overall intention toward tech spending was negative on average for the whole year. The average for the 4 quarters being 49.12. As we said, by comparison, the average score for 2024 to date has been positive. So this projects to be a year-over-year improvement in terms of the attitude towards spending on technology, or the positivity towards spending on technology, despite economic volatility, high interest rates, things that might be pressures on spending.
And to add to that, when you do look at our data, we've been tracking longitudinally for years, especially as it relates to spending on technology and macroeconomic indicators. And so we even go back and understand that we can see how it's correlated even during the heyday of remote work during the COVID times. And then we can see it going down when we started having some real negative macroeconomic trends. And now from here, we're using that and we're seeing the uptake. And as Liam was saying, the stabilization. What's most interesting is the fact that we can not only look at it at a high level, but then we can take that and we see where spending's going by different categories, by different businesses, whether they're small businesses, large businesses, and looking at it from the different categories. And so Liam's right. The primary range is positive, but the real insight's going to be where are we taking that and connecting that to the rest of the research too.
So the tie-ins beyond that. Well, so you were mentioning the ability to slice and dice the data. It's not PowerPoint or spreadsheets. We actually have got a real dashboard on this that allows you to take a look at it. And it sounds like what you're heading towards is it's some of those insights. The top line numbers are great. Hey, we are, again, nominally positive, but it's digging into that to look beyond the aggregated numbers into some of the specifics in particular areas.
Yeah, and it's the confidence that we have in the data because we have the longitudinal, we've proven out that it is indicative of trends. So now let's move beyond that and understand the surrounding technologies that we've been looking at over time, such as where are hot topics such as information security and cloud infrastructure, along with what's top of mind with everyone else, which is around AI and the surrounding trends around that. I personally also take a look at what's going on with customer experience and commerce and whether that's soft or not. We can discuss that a little bit more forward, but they're spending. The question is where.
You brought up customer experience. What is it showing us? Because we are starting to head into the holiday season, a point at which customer experience is front and center for all of us who are doing our holiday shopping.
It is. That doesn't necessarily mean that businesses are focusing on it correctly, right? Because they might have had some investments. And one of the things that we are seeing is some fluctuations in some of these more niche categories that come out. And they're not like customer experience is niche. But when we look at some of the top trends, they also correlate to customer experience, right? So information security, that's very much aligned with data security and where everyone's going, data privacy. And so there's and has been consistently top spend in that category. And a lot of it has to do with protecting company data, but also customer data. As we shift to things like cloud infrastructure and cloud infrastructure services, a lot of the things that you and I have discussed on prior podcasts, Eric, is the role that the end-to-end infrastructure plays at delivering that point of interaction with the customer. If your website's down, if you aren't able to have your e-commerce site up, a lot of that has to do with edge infrastructure and performance on that. And that's number two, consistently across the board. And then AI technology, of course, is one of those things. And a lot of customer experience and technology is really to do with getting the personalization correct, getting privacy correct, understanding how to improve self-service capabilities, guiding customer service and support and contact centers. All of this is going to be critically important as we come up with that holiday spending, as you were talking about. But we have to do it with the right trust and security and where that's trying to go. Versus if you just look at the CX category, it fluctuates primarily if you look at it from the point of view of IT versus the point of view of line of business buyers. But the spending is still there because our specific surveys really have it as when you look at line of business, and I put this in this latest report, when you look at line of business versus IT, you're getting dramatically different results versus just looking at it horizontally across top line. Line of business is really investing in, of course, like sales, marketing, service, is still investing in upgrades of their technology and investments in new technology.
So that focus on improving customer experience is still there. Again, one of the things we've talked about is those who are more digitally mature, the ones who are out there leading the charge on this, are continuing to invest. And in at least what they're identifying in the study results are reaping the benefits of it.
Absolutely. Liam can give more information on the top categories like information security and cloud infrastructure. And then there's also a lot of spend around data analytics and tools. Even though that's gone down a little bit, we're still seeing it as one of the top criterias.
Well, there's maybe a little bit of AI driving some of that, as it is driving so much of what we're dealing with on the technology side generally. It does seem like AI focus is starting to really shift budgets, but it sounds like there's some practical pieces that you're identifying around here, at least on the customer experience side. But that's also driving things, I'm sure, on the infrastructure side, as we see in a lot of the other study data as well.
So I can confirm that, in the tech demand indicator context, we definitely see the intention toward AI increasing quarter over quarter. We actually saw it dip a little bit in the most recent quarter. So in our Q3 data, it sank a little bit, remained in the third place as far as that sort of intention to grow spending.
Well, it had been pretty breathless for a while, right?
Yeah, no, it's been one of the few things that was on this continuous upward trajectory. And so, what's interesting for us is that, well, we can make all kinds of interpretations about what's driving that. I think it might reflect a change in the intent to increase spending, where companies may have made that initial investment and are now sustaining a baseline level of spending. Or it might reflect that they've encountered execution hurdles or maybe some real world limitations of a technology that they were very excited about. And so there's maybe some tempering of that enthusiasm. What I think is really interesting is that we look at the tech demand indicator as like this one signal in a pool of things that a client might be evaluating in order to get a feeling of what's happening in the market. How we're using it is we've been looking at it as market context for those deeper dives that Sheryl was describing, where, we're continuously going and looking at a variety of technologies in much more explicit detail. An example of using that as context, if I may plug something that I worked on, is so we also have something called the Cloud Pricing Index, which I think you know very well, Eric, is a tool that tracks pricing and changes for
our own CPI.
Exactly. And it tracks all this information about a ton of different SKUs across the major cloud platforms. We also have some very specialized survey research into things like cloud platforms and AI specifically. So a report that is actually currently with editorial and should be published in the next couple of weeks is looking at the increase in appetite for AI spending that we traced over time in the tech demand indicator as context for, first of all, what's happening with the hyperscalers and what's happening with their new SKUs in terms of both like GPU-based cloud instances and services that are very specific to AI, so things like marketplaces for models and data sets and so forth. And then we're also looking at the proliferation of these alternative niche cloud providers like a CoreWeave or Lambda Labs that are sort of specialized in that area. And then we're looking at some of our AI-specific survey data around the kind of evolving infrastructure requirements, of businesses that are building out to support their AI initiatives. And then finally, we're looking at survey data from our Voice of the Service Provider survey at that kind of universe of managed service providers and other types of service providers and how they view their role in supporting customer AI initiatives. So, starting from that signal of intent that we get from the tech demand indicator and just looking at and tracing out the ripple effect on the infrastructure and services world that's kind of happening as a result of that intent. And that's a collaborative effort between a bunch of different people working in those individual areas. So I would say look for that report in the next little while. I know, Sheryl, we were having a conversation earlier today about how we're using TDI, and Sheryl you were saying you were using it in sort of the sort of research agenda player, right?
Yeah, coming out for our previews. Like, for example, when we do look at this, what's really interesting is the share of wallet, right? So when I look at my survey data, I'm only looking at where customer experience trends are going. Fabulous, right? So we're asking sales, service, marketing. But what's most interesting is to look where it stack ranks and then who is spending on what and why. And so what I like to do is take a look at all the different use cases and put that into our preview. I did last year, and I'll be doing that again this year, especially as it relates to some of the intersections of what you just said, Liam, the AI technology. And look how much the IT infrastructure hardware has grown into spend. It's like number 4. And then we look at data and analytics tools right behind it. That's what's most important, is to then see how all of this is going to correlate. And from there, we take a look at what's going to happen in 2025. And as we get more comfortable with a lot of this data, we're going to start looking at more regression analysis to be a lot more predictive and say, okay, so this is what we're confident about next quarter, but where are we seeing the quarter after that and the quarter after that? And that's part of where we go into a little bit more detail in our 2025 previews that we're all working on right now.
Yeah, it's those tie-ins with the other aspects of research that you can look at this broad indicator and start to correlate that with the kinds of things that we see in other more specific areas of tech as we start to roll this out. As the old saying goes, it's all interconnected.
It is all interconnected. And then when you take a look at the difference between like employee tools and IT tools and then customer tools, there's so much going on. It will be an interesting year.
Well, I was fascinated talking to Connor Forrest a couple episodes ago about the progression in HR tech and how that is leveraging a lot of the advances we've made in technology broadly, specifics about analytics and how they're getting integrated, and this whole shift to being a much more digital business in terms of being able to actually make the best out of all of the data that as an organization one generates and put all that together. Just fascinating to see all these gears start to mesh in terms of each of the insights starting to fit into the ability to actually look, have a forward-looking perspective on where this is headed.
Yeah, absolutely. And that's a really good point, Eric, because one of the things we also take a look at on my team is understanding different personas, right? So we've all tracked digital transformation now. We're pretty mature in that. We're tracking whether you're an early adopter or not. And one of the things I've done is put a lens on that for our team. And we have something called a CX data driver versus a CX data drifter. I presented this at our Dreamforce event. We're going to be doing another webinar coming up. But it really is able to take a look at the type of businesses that are focused to be much more data driven, whether that's on their CX side, whether that's on their employee tools, whether that's in IT management, and how that's all playing out with some investments into 2025. Again, it really is a difference because we're seeing CX data drivers as investing in AI. They're less concerned about their models and more concerned about using the right data at the right time and empowering the employees.
And it sounds like it's that transition for those that are a little further up the AI maturity curve. They already know what they're looking for. They've mastered some of the data pipeline pieces. They've really started to move forward in terms of some of those capabilities. And it sounds like from the data, it's paying off.
Yeah, the results do show. And we see that they are spending more strategically on some of these projects. And from a CX perspective, I see that the results show they're able to have 2 times more improvement. They isolate themselves as showing that compared to ones that are further behind.
Interesting transitions in terms of how this starts to play out. Again, we keep talking about those digital leaders are pulling away from the digital laggards, both in skill capabilities and their ability to actually reap the benefits of those technology investments. So I'm curious about some of those tie-ins. I will point our listeners to the show notes for a lot of the research we've been talking about. You also mentioned that coming up, actually the day after this podcast airs, there is a webinar you're going to be doing on this. Can you give it a little background on that?
Yeah, sure. So the webinar is called Technology Spending Intent Highlights from Q3. It's a view of what we've gathered in the tech demand indicator during the Q3 results. Some of the things that we touched on here, a deeper dive on some of those details and some of those trends. If somebody is listening to this the day it comes out and they want to attend the webinar tomorrow, we'd love to have you. If you are listening to this a little bit later and you'd like to join us on the replay, we'd love to have you in that respect as well. And I'm sure there will be some kind of facility to ask us questions after the fact or engage with us further after the fact. Yeah, we'd love to just plug the webinar. If anyone wants to view that, we'd love to have you.
There will be a link in the show notes. So whether or not you're there live or you come back for the recording of it, we'll give you pointers in terms of where all that happens to go. And I also want to do one other shout out. Liam, you'd mentioned the 451 Alliance. This is one of the things that we talk up on the podcast on a regular basis, which is the panel from which we draw a lot of that research. Can you give our listeners a little background on the Alliance and how they can potentially be part of this?
Yeah, I mean, to be totally candid, I kind of, in preparation for this podcast, asked Eric if I could please shout out the Alliance. A lot of our survey or the tech demand indicator, but also just our survey research in general, a lot of it is thanks to the participation of the members of our 451 Alliance, which is our panel of IT decision makers, and then the larger extended panel of our consumer decision makers. And they very generously give us their time. They take our surveys. In exchange, we give them a curated view of the data that results from these surveys. They're a special survey panel in the regard that they are motivated by the outcome of the work. And so they're interested in putting in good information and getting good information back out for themselves. And we very much appreciate their participation. And speaking of participation, I would love to extend the invite to anybody who's listening to this podcast. If they're involved in IT decision-making, or maybe I'll address you directly. If you're involved in IT decision-making at your organization and you'd like to see if the Alliance is something you'd be interested in making a contribution to and hopefully getting something out of, you can go to 451alliance.com for more information, and we would love to have you.
Well, because one of the benefits is that you do get access to the data. You get the special feeds of analyst analysis and reports, data that are coming out of the team as part of that whole relationship. So one of those things that keep you up to date on what's taking place and the latest in technology, as well as some peer perspectives in terms of budgeting. As we're heading towards the end of the year, I'm sure there are a lot of us out there that are starting to look at our budgets for the year ahead. If you want to be able to make a salient case that most of your peers are spending more on the kind of things that you want to spend on, and you should too, it's great data to be able to leverage for that as well.
Co-signed.
Well, thank you both. This has been great. There is, as usual, so much more we could potentially dig into, but we are at time. But thank you. We'll clearly have you back to talk about the next iteration of the TDI and watch some of these trends unfold. But that is it for this episode of Next in Tech. Thanks for being back.
Thank you for inviting us back.
Yeah, it was a pleasure, and looking forward to next time.
And thank you to our audience for staying with us. Keep in mind, if you enjoy what you're hearing on Next in Tech, please subscribe in whatever format you use. Spotify, YouTube, Apple Podcasts, or on the S&P site itself. Let us know that you're interested. We're also soliciting ideas for our 200th episode coming out in the new year. So see what's going on there. I hope you'll be back then. Thanks to our production team, including Sophie Carr, Franmi Adeosun, Kira Smith on the marketing and events teams, and our agency partner, the 199. I hope you'll join us for our next episode, where we're going to be doing hot takes on the financial technologies world. The Money 2020 conference is going on right now, and Jordan McKee is going to be back on to talk about what was there, some of the highlights from the event, and some perspectives about what are the latest and greatest in fintech. I hope you'll join us then, because there is always something next in tech.